to the latest quarterly market update for the final quarter of 2025. As always, I'm joined by Steve Garth from Principia Asset Consultants. Thanks for being here, Steve.
Yeah, thank you, Rob, and Happy New Year to you.
Happy New Year to you too, and Happy New Year to everyone out there as well. Steve's going to walk us through the final figures for 2025, but what also drove markets through the final quarter from September through to December. Steve, would it be fair to say that 2025 had a little bit of everything? Markets started off a little bit choppy, a bit shaky with Donald Trump, the tariffs, the trade wars. We saw markets fall, consolidate, recover, move on to new highs, and then we had a bit of an inflation shock, if you like, and some changes to expectations around interest rates later in the year. But overall, a pretty good year. What can you share with us about what drove markets?
Well, you've really summarised it, Rob. Often when you say, look, we've had a good year, we made 10.5%, people forget that it was a bumpy journey. It's always a bumpy journey to get there. And when you look at this chart, it shows the Australian stock market and the US stock market, how they've behaved over a year. And it really brings out your points, Rob. You see that big dip in early April. Well, that's the announcement of tariffs. And then only a week later, tariffs get put on pause and markets are up and away. And in fact, they were hitting new highs by the end of October. Now, to your point, come November, there were a few wobbles in the market around inflation and future path of interest rates, and you certainly see there's a diversion between the US market and the Australian market. US market recovered from the wobbles and kept going up. Australia kind of got the wobbles and went down. So overall, a pretty ordinary quarter for Australia, down -1%, but a pretty good year, up 10.3%. That is higher than the long-term average. On the US, on the other hand, another amazing year if you're a US investor, up near 18% for the year.
We spoke about interest rates, we spoke about expectations around interest rates. How did that flow on through to the bond markets and the fixed interest markets?
Yeah, the best way to look at the expectation around interest rates is through the bond market. Now, no one's really very interested in the bond market, but trust me, they are the gods of financial markets because they're kind of putting in their expectations of the way the economy is going to go. And you can see in this chart that you see kind of similar behaviour. In other words, Australia and the US, their 10-year yields, tightly correlated. They've been correlated for years, actually, but now we've seen this dispersion again in there. So the Australian yields have shot up in the last quarter based on that inflation and interest rate expectations. While the US is kind of flatlined, but it's been on a downward path. So when you look at, those yields play directly into the returns you get out of bonds. So Australian bonds, not much of a quarter. An okay year, but a much better year from global bonds that are hedged back to Aussie dollars because they're really driven mainly by those US yields.
And with those changes in expectations around interest rates moving forward through 2026, what can you share with us around interest rates here in Australia, but also globally?
Yeah, well, first of all, Rob, if we look at the sort of path of interest rates over the last 5 years, back in 2021 when we start this chart, they were zero, remember that? The US shot up faster and higher than Australia. So we lagged a little bit, so it's probably no surprise we're coming down a little bit slower than the US. And you see right now, interest rates are about the same in both markets. But what the bond market was reflecting is the way things are going to go in the future. And the expectation is that in Australia, we've kind of reached the end of this interest rate cycle. There's not going to be any more cuts. And in fact, the next movement will be upwards. We don't know when. Probably much later this year, but no one's expecting another interest rate cut here. On the other hand, in the US, they are still expecting at least one more rate cut this year and maybe one next year. So that's why you saw that big dispersion in the bond market.
Excellent, excellent. So when we take a step back and we think about the different asset classes, so we've got bonds and fixed interest and equities, what can you share with us about the final results for 2025?
Yeah, I think we just talked about bonds. Why don't we go back to equities and look at those major asset classes? So in this chart, we've got the Australian market. We talked about that. Not a great quarter, but up 10.3%. 3% for the year. And then you look at the developed markets, which is part of a diversified portfolio, in Aussie dollar terms, up 12.5%. That's a great return. And then you've got emerging markets, which have been a bit of a laggard for a while. Wow, up 24% in Aussie dollar terms. So if you're in a diversified portfolio, you've actually had a sensational year out of the equity market.
Excellent, excellent. So we've seen some fantastic returns, like you mentioned, Steve, from the equity markets, both at home here in Australia, but also globally. Decent returns in bonds and fixed interest. There's sort of a choppy quarter there for the December quarter, but overall, diversified portfolios have had a fantastic year. Well, Steve, thanks for joining us. It's been a great 2025. We look forward to catching up with everyone through 2026. As always, if you have any questions or any concerns, please make sure you pick up the phone, give us a call. That's what we're here for, and we look forward to catching up with you all soon. See you next quarter.